Alright, so, as expected, market rallied. And this is what I was talking about in the prior videos. If market goes down, right here, there was some concern. But then after that, it dried up. Totally dried up. Went from 7 to 4 to 2 to 0. This, when you see that, how do you interpret this? Well, you interpret this as supply decreasing. Supply is decreasing. 7, 4, 2, 0. In some cases, what happens, you go 7, 4, 2, and then there'll be like a climactic move, and then there's a reversal. Or it's just going to dry up. And this is what's showing you supply in the range dried up. And it dried up when it was in a spring position. You see? The market went in a spring position and then it rallied. That's what the 5-minute chart is saying. The other thing to kind of note is, let's just take a look here. So here, 2 and 0. So downwave has more volume. Here, 7 and 0. Downwave has more volume. It goes up on 2, goes down on 4. Downwave has more volume. I'm not using the zeros here because it's just, something in the day or whatever. You have to just take a look at the significant. So 4 and 2 and 4, and then 1, right, down on 2. Here, 4 million shares were bought, and when it went down on 0. That to me is telling me that there was buying right over at this level. And the spring here, it didn't break out. Like if it broke out, at least you'd have volume, but it basically the CM just tested right under that area to see if there were any orders and whether selling would start, and they're not ready to sell. Smart money not ready to sell there. So what happens? You have a rally, big rally. So what are the key things to take away from this, meaning key learnings? First learning, when you're observing supply, take a look at the supply pattern of supply, whether it's in a range or whether it's in a trend. Watch that pattern of supply to see if it's increasing or decreasing. Alright, so when the down waves are diminishing in volume, get ready for the up waves to start coming in on volume. Because down wave on less volume, there's lack of trade, lack of interest, which is going to embolden the bulls. That's what it does, especially if the trend is up. And so that's the first learning, right here. What's the second learning is the springs. You see that when we're playing the range over here, the up thrust took it all the way down to the spring. Spring is very I'm not too crazy about the term spring. It's more like a test of support. It just goes a little bit lower. So a lot of folks are really hell-bent on the springs and up thrusts, and the reason why they are like really important, though, even though I'm not like all about springs, what I know is that they're used to test how much volume is going to come below a level to see what is the selling pressure like. Are there orders there? Second, it's also used to run stops. So that's basically it. And third, obviously, when you run the stop, you're accumulating or distributing. So when it goes down below that low, there's a transfer, meaning stops are run. So folks will have to cover whatever, and they will sell, and that someone else will buy and take the inventory. So in this case, what happened was the market went down and found nothing, which means there's no zero. All right, it doesn't, like zero. Okay, so what do you think is going to happen? Obviously, it's going to go up. So that's what happened. The only thing that concerned me was this right here, the selling, and then like over here, the one. But when the 4 came in and it went down on 0, this is at a spring level, like under support, because that's where you expect the breakout to occur, but it didn't. So anyway, that's what led to the reversal. Here now you go up on 4 and down on 6. Like, what the hell is going on here? Right? Is this effort or is this something else? Is this, I don't know what it is, but it broke out, and now it's time to watch what happens. I'm not a fan of like when it pulls back on heavy volume, even though a lot of folks are looking for that effort and all that. I'm not a fan of the heavy volume on the pullbacks because it gets very complicated. Anyway, so we just take a look at it from a supply and demand perspective. I hate labeling all the waves because it's very difficult to understand within ranges. But at the edge of the ranges, it's really good to understand, what's going on there. So demand is obviously greater than demand. Why? Because I think it's 101 what? 101 hours? I forgot what it was. I think so. I think this is 4 days. It's not 4 days. How could it be 4 days? Well, something up there is 101. I'll double check what that is, what I was doing there. But 101 and $11 up. So this is really good. Let's see. Oh yeah, it is 4 days. See, 521 to 525. Yeah, so it's about 101 hours of time and $11 up. So demand has taken over. Now, what do we see? The daily chart, basically absorbed and then pop. But I'm not a fan of this volume coming down low. It should be lighter. Anyway, we're going to find out what happens. Take care.